Hi guys, for today's trade of the day, we'll be looking at the gold dollar. That's XAU USD. And why we're looking at gold is because given the current economic climate, along with the virus outbreak, we want to see how a safe haven such as gold is actually doing during this period. So as per all technical analysis, we always use a top-down approach. We start off with the monthly, work our way down to the weekly, to the daily, and we find the strategy on the 4 hour and even the 1 hour. So there you have it. We have the gold. And what we like to do in technical analysis is to focus on the current prices. Now, everything in the past is relevant, but it is the current prices that tells us whether prices will go up or down. And with that, let's start. We see that gold actually made a low here in December 2015, and then it made a high before it pushed back down, and then it moved up. Graphically speaking, there's sort of a graphical resistance here. The spikes, we try not to take the spikes unless it's a very important spike, but price has sort of been testing this zone, right? Back in 2011 all the way to 2012. So this 1824 level, we want to confirm it with a Fibonacci level. We can use an extension, 0.1 to 0.2 to 0.3. And we see that the graphical resistance, long-term resistance, falls in line with the 2 times, right? 200%. So let's just highlight that level. So we have our long-term resistance. And let's look for our long-term support. Graphically, it's sort of a support here. Where price actually tested once, came close another round before breaking it. And if I were to extend this line further back, you see that price tested it here as well, right? So this can be seen as a strong graphical support. Let's call this our long-term support. We can also confirm this using Fibonacci ratio. We use a retracement from the swing low here all the way to the top. And we see that price is actually in line with Fibonacci retracement of 50%. So these are strong long-term resistance, long-term support level. With that, let's go down to the weekly. Let me tidy this up for you guys. And tidy up the retracement ratios as well. Okay, so what we have here is we want to focus on this recent area. Now we see that price has sort of been making higher lows, right? So clearly it's in an uptrend. But recently, price also made sort of a sharp push, right? A V-shape down. So to see how far this V-shape can go down, we can use this like an irregular V-shape. We can use Fibonacci extension. This Fibonacci extension, we take from this point here. Just do this. We take from this point here to this swing low and back to the spike at the top. Open up all Fibonacci ratios. And we see that weekly support falls in line with the 100% over here. All right, we can call this our weekly support. Okay, and of course, we can use the weekly resistance as sort of this area over here. And why I chose this place is because if you look carefully, price actually tested this entire zone twice. If price were to push back down, what we have is essentially a double top pattern forming. Okay. So here we have the weekly resistance, here we have the weekly support. The bias is actually for price to perhaps do a short pullback and then after that follow the long-term trend towards the long-term resistance. Right, but we can confirm that only on the daily and even the 4 hours. So let's go down to the daily. Very quickly, we're down to the daily. Actually, I can even remove the long-term support because prices are too far away now. Just want to focus on these levels here. So on the daily, we see that this sharp V is actually a push down and then a sort of a zigzag pattern up. And every time we see this zigzag, we must tell ourselves that we can use Fibonacci extension to see how far prices will go up. We use the Fibonacci extension tool from the lowest point to this point here and down. Open up all Fibonacci ratios. And we see that the weekly resistance is also quite close to where I would put the daily resistance, which is actually somewhere here, the 88% extension, right? Where price actually spiked to once and twice before rejecting. Okay, so we can call this our daily resistance. Now I know it seems a bit strange to have the daily resistance above the weekly resistance, but what this tells us is that essentially our resistance is a zone, right? So this is something that we need to take note of, that it's really a zone. Okay, so we just got to be careful of this zone. And now that we have a daily resistance, we want to find the daily support. So we see that price actually made a push up, right? A strong push up. We want to see how far price can retrace. So we take a retracement from the swing low, the swing high. We open up all Fibonacci ratios. And we see that the key Fibonacci ratio of 61.8 is actually quite close to this graphical swing low here. So we can actually call this our daily support. Let's just highlight this to be green. And we just select this 61.8. So what we have here is, recall that on the weekly, I say that markets will probably do a slight push down before resuming a longer term move, right? So this is essentially what we have. Price reversed below this resistance zone that we identified between the daily resistance and weekly resistance. And price seems to be making a push downwards, at least to the daily support before any chance of a bounce. So let's go down to the 4-hour to fine tune this. Okay, now on the 4-hour, this is what we see. Let me fine tune the daily resistance. Okay. And our weekly support. Daily support. Okay. It's important to note also that the bearish bias that we have, just recall, we actually have a bearish bias, right? If I were to draw a trend line from the bottom here and I were to cut through all this, we see that this trend line has already been broken, right? The trend line held very strongly here, above here, here, and then price finally break through. So what I'm thinking is that price could actually do a pullback, okay, to anywhere in this area before coming back down to the daily support. Okay, so this is the trade of the day that we have for today. What I'll actually do is I'll use this weekly resistance as sort of my entry, my sell entry. And I'll use my daily support as my take profit. Okay, and my daily resistance as my stop loss. So this actually gives me a very nice risk reward of, say, somewhere around, I'll put my stop loss slightly above. So if prices were really to break above, I know I'm wrong, and then I'll probably play along towards the long-term resistance instead. But this trade should be a risk reward of around 1:3. Okay, so we have the sell entry, the stop loss, and I'll take profit. And overall, we are actually bearish on the gold dollar. Okay, this is probably due to dollar strength being very, very, very strong at this period. So that's it. That's the trade that we have for today. And hope to see you guys tomorrow. Take care and stay healthy.